Very quickly, if you haven't got, it's unlikely that you'll have a VIX on a lot of broker platforms, but if you head over to investing.com, you'll see here, this is on the monthly chart, and it's just to give you a sense of some perspective on the kind of values that you're seeing at the moment on the VIX. And we can see here it's been spiked up to 60. It's now coming down to 54. The way you read this indicator is it's an inverse. So for example, if the VIX is moving higher and to the highs that we have at the moment, then things are really bad. Equities will be falling, very much risk off. And just to give you, as I said, a comparison of the values that we're seeing at the moment, these are the other occasions where we've had a market swoon, market crash. This is the big one back to 2008 when I said I think it actually got to 89, which was that really was, those of you who can remember or maybe were in the markets at the time like we were, that was Lehman's and etc. As always, from a sort of contrarian perspective, and you may have heard of the expression from Warren Buffett that you have to be greedy when others are fearful and fearful when others are greedy. And this is what this means: is when you have these big turns in the market, then this is where if the market has had a big fall, but everything comes to an end. It's not necessarily trying to get at the exact timing point in the market, but it will come to an end, things will calm, and that's when the buying opportunities will come again. And similarly, at the other end of the spectrum, when things are very complacent, as we've had, I think I put something up saying that we were in, complacency. The market was practically comatose in the sense that it was just going higher and higher and higher. And that's when the VIX goes lower and lower and lower. And when the VIX gets down to almost single figures, 11, 10s, 9s, those sorts of numbers, then the market is very complacent. Equities are going higher, and something is likely, something is going to happen. You can't tell how and when, because as we can see here on, this is the weekly chart, it's not very, let's have it if I can get a 5-year chart. Here we are. You can see here it'll bump around, sort of 11s, 12s, with minor sort of, little scares, as it were, little pullbacks, but it will continue higher until we get this massive sell-off that we've seen at the moment. So the VIX is a great one just to have, because it gives you a sense of what the kind of emotional state of the market. And the question now is, okay, this is the market condition we are in at the moment. It's very volatile, there's a lot of fear, everything's selling off, but there are trading opportunities if trading is how you define it. You're not looking for this as an investor at the moment. It's much too early for that. Things haven't calmed down enough. But as a trader, you're looking to take an opportunity, see an opportunity, and make some money. What do you actually do? If you want to say, okay, well, I know things are very volatile, I know things can turn very, very quickly, but I still would like to see, if there is an opportunity, how can I, what can I do? And first of all, you have to use multiple time frames. You can't just focus on one time frame, one chart. And the other two things I would say, in terms of your position sizes and the amount of risk you put on the table, you put the smallest amount, the smallest amount in Forex. It'll be like a micro lot. You just put one micro lot on, because what is the worst that can happen? You're going to lose that. It's not going to be a huge amount of money, but it gets you used to this type of trading environment. And you may actually, it may go in your favor, which is great. And if it looks like it's really going in your favor, then you can always add to that position. So you approach these markets in a sensible way. You don't go and lay, and you certainly don't use massive amount of leverage. You just you take it very, very easy. as I said, in terms of position sizes. You then use charts, as I said, multiple time frames, and you look at using non-time based charts. And I've actually got the pound Aussie here at the moment, and this is from the my MT5 platform. And this is what I mean by multiple time frames. I've got the hourly chart. This is this huge move that we had in response to the news about oil. We had this massive volatility candle. The price action is really still within the range, just below the range of the candle. It doesn't really know on the hourly chart. If I expand that out, what are we looking at? You know, market is obviously quieting down. There's not a lot going on. You can see that just by looking at this little candle here. This is on the hour, but not necessarily on this candle, but when you had this candle, you had this candle, there would have been trading opportunities in the faster time frame. So how do you approach those? Well, you use on MT5, I don't have tick charts, I have a renko chart. And what I've actually done, because the indicator that we've developed for renko for MT5, you have a couple of options. You can either set it to a fixed value, and this is a fixed value where it's actually based, each brick is 3 pips. So you can set it, you can even set it to 1 or 2 pips. It's entirely up to you. And sometimes when markets aren't moving very fast, they're range bound or they're a bit slow, and you think, no, I think I might be able to take a few pips here and there. This is what you would do. You would set it to quite a fast speed, as it were. Or we have the version which is the ATR version, and basically the indicator itself sets the value for the brick sizes. And let's just have a look what that value is at the moment. And it's actually running at 8.42. When it runs at these kinds of values, 5, 6s, 7s, 8s, 9s, it tells us there is movement, but there's not a lot of momentum in the market. So the indicator is telling you, you know, what are the conditions out there of the market at the moment. So it's a great way of being able to try and get a sense of whether the market is moving fast or not, because a time chart, you know, the candle or the price bar won't complete until that predefined period has actually ended, as it were. So the 3-minute chart, well, you know, the candle will close off after 3 minutes. And, you know, support and resistance come in. You look at your candles, your candle patterns, you look at what the volume is doing. But in terms of entries and, you know, potential opportunities, you can't really, I don't think you can beat a renko chart. And the way we've developed this one is basically with a number of the indicators. They work really, really well. One is the trend dot, which is this little dot which is very close to the market, and with the trend monitor. And really the kind of entry and an exit is based on when you get a confirmation, you get the same colors, the bright colors coming up, then you can take perhaps a trading opportunity. And looking at the time charts as well, and what is the time charts telling here? We've had the push off the volume point of control, moved up, consolidation, a resumption of this primary trend. Then you have these two most important candles in this trend higher, these 2 little candles here corresponding with the volume you have here, a ton of volume going underneath, but the price isn't going anywhere. Then you've got a hit of this resistance line here, 99.28, and we've got a kind of a drift lower. You have to remember as well, we are coming to, you know, London's closed, New York is, we've got a few more hours. So you have to read the volume and the price action also in the context of the session that we're in at the moment. Generally speaking, this time of during the 24 trading day, it tends to be a little quiet. I know at the moment we are not in normal conditions, but that's what tends to happen. So putting all those together, if there's an opportunity and you're happy to take it, make sure you've got a very, very small position size, no leverage, in fact, no leverage at all. You won't be making huge amounts of money, but it gives you it gives you, you can practice in different conditions. How can I put this? It's a bit, we always use sailing analogies, and you know, when you set off on your boat, it's lovely to set out, and you know, it's a lovely day, perfect sailing conditions, and suddenly there's a huge storm breaks out, builds up, you know, the wind, rain, everything, you're sort of overcome. You still have to learn to manage that boat. You still have to learn to sail through those conditions, and that's what you know, by doing this kind of trading in these kind of conditions, this is what you are doing. Is there anything else you want to add to that, David, or is that it? I'll pass back to you. Is that okay? Apologies, we're not actually going to pass back to David because he's not got the information that I've got on my screen. So before we go, let me just quickly direct you to quantumtrading.com. This is where you'll find information on all the indicators that you see on our charts, and as you can see, they're available for MetaTrade and Ninja TradingView. Not all the indicators, it's not been possible to develop them for the TradingView platform because of the way the code that's made available on TradingView, but we are, you know, we're trying to bring as many over them as possible by doing different things to them, and we're working on TradeStation as well. And on the Forex side, we do have a specialist program for that, which is over at Quantum Trading Education, and that's where you get all the indicators plus the education videos and everything else that, and it's a complete package. It's the indicators and an educational element as well. So that's all I've got to say. Is that okay? We're back tomorrow for the London Open. It's at 7:45 UK time, which is just before the London Open, and we'll see what's going to be happening, what's happened overnight with the currencies and the currency pairs. I'm sure there'll be plenty of trading opportunities at the London Open. There always is. And I know some of you will be joining us then, but if not, perhaps you'll be able to join us next time. The next webinar, we'll be sending out an email link, so I hope we'll see you then. If not, we'll see you tomorrow. All I can say is take care in these conditions. They are very, very stormy, very, very torrid. Doesn't mean you can't, you know, try and take a trade, but only based on the, you know, what I have said. Very, very small position, very small position size. I can't stress that enough. And if you don't even want to take it in a live account, do it in your demo account, because at least, you know, I know people say you should step away from markets, but you know, markets are always in different conditions, and you have to learn to be able to deal with all the different market conditions that we face. So that's all I've got to say. David is waving goodbye. Thank you for your questions. I hope you've learned something that you know, perhaps you didn't know before, and we will see you next time. Take care.